There's no love lost between industry superannuation funds and their arch rivals, the big retail funds owned by banks and other financial institutions. Today, industry funds turned up the heat, claiming investors in retail funds will be better off sticking their money in the bank. Not surprisingly, the retail funds have rejected the claim. Here's Simon Pallan.
Recent share market volatility has done no favours for many retirement nest eggs. The body, which represents industry super funds, has looked at the performance of retail funds, which are generally operated by the largest banks and insurance companies.
Over the last 14 years, their returns have been about 3.6% per annum on average, which is less than cash. And frankly, for retail super members, their money would have been better in the bank.
That 3.6% for retail super funds compares to 4.2% average returns for cash and just over 5% returns for all super funds.
For the most part, retail super funds are delivering unacceptable returns to their members.
The Industry Super Network estimates the underperformance of retail funds over the 14-year period amounts to losses of $83 billion in national savings. But the Financial Services Council, which represents the retail funds, says the research is misleading.
It's a bit like saying all Fords are faster than all Holdens. Now, the reality is that's simply not true. So to say that all retail is better or worse than all industry or all corporate superannuation products or government superannuation products is simply wrong. At the moment, these sort of self-serving arguments from the Industry Super Network prove only that they're scared about losing their monopoly on industry awards.
The research comes as retail super funds try to gain a bigger foothold in the default fund market. Those are funds chosen by a worker's employer. But the Industry Super Network argues its research shows the retail funds are not up to scratch.
The poor outcomes from the retail super sector can be attributed to a number of things. One is they have higher fees and costs, typically because of commissions paid to financial planners.
In some places they're too high, there's no doubt about that. And what we hope and what we trust is that the reforms announced just last week by the government, the MySuper reforms, will see an overall reduction in fees.
The Industry Super Network is urging investors in retail funds to look around for a better deal.